Hi everybody, Lance from tastytrade.com here. This quick update video, we're going to look at the covered strangle strategy on MES futures. Placed a trade 5 days ago, just closed it this morning, made a 1.3% return. It's a good return if you do that over and over again. You can really grow your accounts well. We're going to look at the trade, where we sold our strike prices, and how we managed it. If these videos are helpful to you, please click like, subscribe, share with others. Appreciate all your support. And let's just get right to it. All right, here's a covered strangle trade that we do at tastytrade.com. This goes for yearly and lifetime members for MES futures. Really good way to grow accounts, as you'll see. Pretty safe strikes. Could get a sign on these, but in this case we didn't, and we took our profits relatively quickly. So on June 23rd, 2023, posted to our Discord group, new covered strangle. The MES at the time was 43.88. Their expected move was 83, and this is one standard deviation move away from it. We like to sell strike prices a little bit below that. So if you do 43.88 minus 83, you're at about 4,300. We sold a 42.80 put, so a little bit outside that expected move. That was a 0.16 delta. And then we also sold a 42.30 put to take in a little bit additional premium. It was a 0.09 put. Took in 14 in credit. MES has a 5 multiplier. So 14 times 5, and that was our initial credit that we received. This is the chart for MES. Right here in this gray box, this is where we entered the trade right here. And then the red lines are where we sold our puts. Sold one down here. This is the higher delta, but a little bit outside the expected move, which is right around here. And then we sold another put to get a lower average if we happen to get a sign on both contracts, and you take in a little bit more premium. Just today at 10:24 Central Standard Time, we closed it at 4.5. So we made a $47.50 profit. It's about a $3,000 total account you'll need to do one of these strangles. Even though our buying power was about half that, or 1,500, and it never went much higher than that because MES didn't really move too much. But I leave an extra 1,500, so 3,000 total to deal with the position. Sold it for 14 in credit, bought it back for 4.5. 14 minus 4.5, you get 9.5 times a 5 multiplier is $47.50. That's 1.5% on your money in 5 days. All right, so looking back at all the covered strangle trades we did in 2023, we've only got assigned on 2 different contracts. And in those, we're actually able to get out of them within 2 weeks' time as well by selling calls against the position. Most of the time, it just expires either worthless, or you can take profit relatively early like I did and just do that over and over again and continue growing your accounts. So if you're interested in receiving help like this, get one-on-one help from me. Also have a group of 140 like-minded individuals that sell options for premium. You can join at tastytraders.com. Everyone else have a good rest of the trading day, and see you guys next time.